Hello everyone and welcome back to the channel. I have an interesting video for you today. We're all waiting for market rebound. The market is in oversold territory, thus the rebound is not happening. And this is another indication that we are officially entering a bear market. All retail investors are keeping hope in the chair of the Federal Reserve, Jerome Powell, to save them. This can be, but not for a long time, because the Fed expressed that they will be shrinking their balance sheet, and the last purchase of assets will be in February, meaning that they will be done by March. So the hope in the Fed to save the retailers is gone. Poof. Furthermore, in the last Fed meeting, Jerome Powell said that he wants to bring back inflation to 2% from 7%, but he didn't explain how he is going to do that, leaving everyone guessing on his own what's going on Jerome's head. But obviously, he will push the economy off a cliff, because he doesn't have many choices, or hyperinflation, or stagflation, or push the whole economy in a recession. So what about the impact of the macroeconomy data on the market? Yesterday we received the jobless claim, which fell by 30,000, and as we learned from our previous videos, good news means bad news for the market, and bad news mean good news for the market. So having more people getting jobs is good news for the economy, but it is bad news for the stock market. This means that the QE are not needed from the Fed for the stock market anymore. But we all know that the market is addicted to the Fed cocaine, aka quantitative easing, and cutting it means more pain to come. That means that retailers who bet, for example, on Tesla, which in the last session lost 10% of its market cap or $100 billion, retailers who are holding Tesla are holding big bags. Same thing for Robinhood, which is down 9%. And let's conclude with what Warren Buffett said. Warren Buffett is teaching meme stock players, crypto traders, and other naysayers some hard lesson about why market fundamentals still apply. Da-da-da-da. With that being said, let's start on the market coverage. And here you go. The Dow Jones is down 7.31 points, or a decline of 0.02%. The Nasdaq is down by 189.34 points, or a decline of 1.40%. The S&P 500 is down by 23.42 points, or a decline by 0.54%. We see that the market gapped higher during the beginning of the session and then tanked back, giving back all the gains in, for example, for the Dow giving back all the gains and closed with losses for the Nasdaq and the S&P 500. This cannot be only an explanation or an indication that we are officially in a bear market, as we said before. Let's move on to the heat map. What we see on technology, we see that Microsoft is gaining 1.05% after releasing earnings. The semiconductor sector of the technology is down. Apple is on the flat line. Consumer cyclical, we see that Tesla is down big by minus 11.55%. That's a huge drop in the market cap of Tesla. It's not gonna affect Elon Musk at all, as he dropped over the little head of the retailers who are holding the bags now on Tesla. Basic material, we see losses for Freeport-McMoRan For healthcare, we see Johnson & Johnson on the green side, Merck's, Pfizer. For the healthcare, drug manufacturer is basically on the green side, financial, MasterCard and PayPal on the green side, with JP Morgan down by 1.76%. Let's check the one-day performance for the sectors who we have on the first place. On the first place, we have energy. Second place, utility. Third place, consumer defensive. The laggards of the days are consumer cyclical, real estate, and technology. Let's take a look at the future. We have energy is on the green side with gains for crude oil, gasoline, heating oil, natural gas, ethanol. Everything is popping higher. Softs, we have coca down, cotton down, coffee down, lumber down. Gains for orange juice and sugar on the flat line. For the metal, we have gold on the flat line, silver down, platinum down, copper down, palladium down. For the meat, we have losses for lean hogs, feeder cattle, and live cattle on the flat line. For the grains, we have soybean, soybean meal, soybean oil, corn, and wheat gaining, while oats is down by 0.76%, rough rice and canola on the flat line. Let's move to the chart analysis. We'll start with the SPY 30-minute time frame. We saw on the beginning of the session we gapped higher above the resistance of 435, consolidated around, and then flashing down to the lows of 431, giving back all the gains of the day. Red impression is persistent on the histogram, and the RSI is crawling downward. We didn't reach overbought territory. That means more pain will be in the SPY. Let's move to the Qs. The Nasdaq ETF, bear flag, and then consolidation of the bear flag. The lines of the MACD are pointing downwards, and the RSI didn't reach the overbought territory. That means that this huge bear flag will play to the downside, so more pain to come to the Qs. The IWM after the fact that they lost support on 210, they dropping and dropping. They dropped big, and this last session is nothing different. We have a consolidation. This huge bear flag is playing to the downside. We see the MACD lines are downwards. The RSI reached overbought territory. We have here a technical pattern of double bottom. Maybe we will see a slight rebound on the IWM as they reach this oversold territory. Put a line here so we can follow with it for the next videos. Let's check now the dollar index. We see that the dollar index is ripping to the upside, busting, reaching an overbought territory on the RSI. The MACD green histogram bars are getting bigger and bigger with the lines pointing upward. That means more gains to come to the Dixie. As long as we're in the Dixie, let's check how is gold doing. Gold is moving to the downside, didn't reach yet overbought territory on the RSI, and the crossing on the MACD and the red impression on the histogram indicating that will be more downwards move for the gold. The 10-year yield did revisit the support of 1.77 and then rebounded higher to the level of 1.88. 1.83 to the level of 1.83. Will be some consolidation sometime. Maybe it will breach the support and revisit the 1.70. Maybe it will go higher, but in general the consolidation will be around this area. I don't see that the 10-year yield will go that much lower, otherwise we will be visiting a very lower level, and that will indicate that the curve will invert. If the curve will invert and the economy will be in a recession. Let's move to Apple. After the pattern of the head and shoulder, they flash to the downside. The MACD lines are pointing downward with the red impression on the histogram is persisting. We reach a overbought territory here, and on the RSI. That means maybe we will have a rebound to the level of 167, and then we'll test it, and after that maybe we will come back to this line, to the support line that Apple is conserving on its upward move. Tesla, after releasing earnings, we saw here the big flash down from the support, from the resistance of the 995. They got rejected at the resistance, and a big massive flash down with the line of the MACD pointing downward, and the red impression of on the histogram is persisting. So I see maybe here will be some kind of consolidation, and then we will see. Even though the revenue of Tesla are impressive, but those numbers are already baked in the overvalued stock price. AMC not doing good at all. After breaking the support of 20, they are on a downtrend. We see that the red impression on the histogram is persisting for days. The red candles are very clear that they win by much the green candles. So more pain to come to AMC. Here you go, Bitcoin built the bear flag and a consolidation. We see there is a crossing on the MACD, and the histogram line of the MACD are getting shorter, so we are in overbought territory. Maybe we will see a small rebound in BTC, but the general theme that BTC to the downside. Let's finally visit the VIX for our chart. We saw the spike to the $40 level, and then tried to cool down, and then another spike, a secondary spike to the 33. The MACD line, they still pointing upward, and the RSI is on overbought territory. All of this we're trying to find the VIX stop, and let's check a lower time frame, maybe the 30 minute. On the 30 minute here we see that maybe we have a technical support here that materialize it with a line, for example. Maybe here we reach a double top on the 33, and we see that the lines, the MACD lines are crossing here, and the RSI is pointing downward. From this technical patterns, maybe we will see a slight cooling down on the VIX, but the confirmation will be received next trading session. That's all I have for you today. Thank you for watching, thank you for listening, and hope speak to you all soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.